I bet you this isn't how you expected to start 2021. What do you attribute this to?
Well, hi, John, Stephanie. Yeah, I mean, it was a phenomenal end to 2020 for us and an explosive start to the new year. There was obviously a lot of pent-up interest that accumulated over the holiday period and unleashed on the marketplace very early in the new year and making that new high. I think investors are looking at four things, and investors of all kinds are coming to this marketplace in increasing importance and increasing size. They're looking at the short-term dynamic, which is around the macro picture, institutional inflows outstripping coin supply, concerns about monetary debasement, and looking for a sort of enduring store of value. Secondly, the portfolio diversification effects of Bitcoin are becoming ever more clear to the sophisticated institutional investor and on behalf of their respective clients. Crypto as a whole and Bitcoin in particular and Ethereum also are very inspirational for the younger generation. And I think sort of a new age of banking is going to include those kind of people just for demographic reasons, but also these kind of products. And then finally, and I think most importantly, on the horizon, something I try and focus on is this concept of digitization, driverless banks, and distribution. And that will really serve to replumb the financial system.
Hi, Danny. I have a question about the central bankers and how they're starting to create cryptocurrencies, or at least they're talking about it. How do you think the competition to Bitcoin, how's that going to play out in your view?
I think it's actually incredibly supportive for Bitcoin. At that top of the 3D thesis that I just sort of briefly outlined is digitization. And we've seen digitization in terms of Bitcoin. We've seen digitization in terms of precious metals. There are, many currencies now that have been digitized, both on a private and a state level. And when you add central bank digital currencies into the digitization top of funnel, then this environment and this ecosystem gets a lot bigger very quickly. And the benefits for those central banks are really profound. And I think the projects that we're seeing, at least 6 or 8, really meaningful projects, one in operation already. That's really going to stimulate the entire digital ecosystem.
Danny, among those four things you mentioned driving Bitcoin prices, you didn't mention investor appetite for risk. And when I look at some of these stocks like GameStop, which had in the past been heavily shorted, that are popping, when I look at what Tesla's done over the past few weeks and months, when I look at IPO ETF performance, that seems to tell me that part of what's driving investors in this market in general is a willingness to take on risk. How much of that is in Bitcoin, and is there any way that you are hedging that?
Yeah, well, that is a great question. And having been in the commodity markets for many, many years myself, and viewing Bitcoin just momentarily as a commodity, which it can be viewed as on one level, the secular trend in all of these commodities is volatility diminishes with time. If you go back to the 80s, gold had 60%, annualized volatility. And what we have been seeing in Bitcoin is a sort of a slow but steady, not straight line, but, a wavy line, a kind of decline in volatility. And really, Bitcoin is now moving, from what was a class of one in terms of volatility, over 100% annualized, back into what I describe as the high end of volatility. So it's always, been a very high vol asset, but that is definitely coming back into line now. And I think that is actually giving investors a little bit more appetite for Bitcoin.
Finally, Danny, what do you think it means that university endowments are buying Bitcoin? I mean, maybe it speaks to that idea that volatility is flattening out, but I don't think of big risk when I think of them, though I guess they're supposed to have portfolio diversity.
Well, university endowments are a very welcome addition to, the family of investors that are coming to crypto. That is a very high quality kind of investor. They're very thoughtful, very knowledgeable, very resourced. And I think they're looking at exactly the things I said before. The short-term setup is good. The portfolio diversification benefits are very clear. There is a generational aspect to it, which obviously, universities are by definition sort of a young environment. But I think for those kind of sophisticated, large, long-term investors, it's this idea of digitization, driverless banks, and distribution that they can kind of get their heads around and see how important this is going to be in the 5 and 10 years ahead of us.
Shepard Smith here. Thanks for watching CNBC on YouTube.